Joining me is Mihir Shah, the Vice President for India at Media Partners Asia, as well as Hanish Bhatia, the Senior Analyst at Counterpoint. Thanks, gentlemen, for joining us here. Mihir, I'm just going to come to you first. You track this space so very closely. You have shared data with us at Startup Central, which will come up on the screens, how Netflix's growth in the last 2 years, if I were to look at market share, has been flat, its market share remaining at 11%. How significant is this? 199 rupees a month. But the question I want to ask you also is that Netflix customer so far has been quite niche. How big a move is this?
Well, if you see, Netflix in India had a good early start as we speak right now with over 1 million subscribers. But over the last 6 months, it has definitely seen some level of slowdown. So what the company has been doing early during the year has been testing out a different lower price point ranging from 250 rupees per month to 65 rupees weekly to address a much wider audience. And as we speak right now, they've now finally introduced a 199 rupee or a $3 price point, which significantly expands the target market for Netflix. So for instance, I would draw a parallel to the multiplex industry, which currently has 100 million audiences in India. Consumers would spend anywhere between $3 to $4 per movie. So in that sense, that's the kind of increase or widening in the scope for Netflix in India. And it kind of now puts it on the same boat as Hotstar, Amazon Prime, and you'll see a stiff competition now moving from pricing towards content.
So, Anish, if I could come to you now, you just heard what Mihir has had to say. The fight is going to be a lot about content. Now, having said that, so far, Hotstar, which, has amazing content and a lot of free content as well, has never really had to bother about its interface as well, right? Let's be honest about it. When you compare the customer interface of Hotstar and Netflix, it's very, very different. Netflix is far more supreme. So in that sense, do you think the onus will again now come on Netflix's competitors to start thinking about things that they didn't really have to worry about till today?
Yeah, I think talking about comparing Netflix and Hotstar, I would say it won't be like a apple to apple comparison, because if we see Hotstar, they earn a lot of their revenues from advertising, whereas Netflix is purely a subscription based platform. So at the same time, Hotstar had a great run with focus on cricket as the differentiating factor for them. But Netflix, what they are trying to do is they are trying to bring their global library and they are trying to introduce their global library to Indian consumers. So it's a different, sort of gameplay for each of these platforms. And I think the key for both of them is going to be their investment in original series. So yeah, and otherwise, we have seen a very strong growth for Netflix numbers as well, and we anticipate the same in this year as well, with the Sacred Games already announced at around 15th of August. So yeah, very positive outlook on Netflix numbers as well.
So, let's take that point forward. That's interesting points that we've just heard. Hotstar has been able to ride on, let's say, the news bandwagon, the sports bandwagon, a big reason, and of course, the entertainment, the GEC bandwagon, which is, a lot of the reasons people may have given up on their Tata Skies, Dish TV, those kind of platforms. Netflix anyway has big plans for original content. You got Sacred Games 2 coming out. You got a lot of other original content. How exactly is it going to make money? I have to ask that question too.
Well, if you see, interestingly, if you look at 2019, you're right. The first half of 2019, a lot of viewership and audiences were skewed towards viewership on sports or election, or some of the competitors like Hotstar having Game of Thrones. So Netflix slate of originals was slightly weaker, or I would say more back-ended towards 2019. At peak, we still expect Netflix to have about 10 to 12 new local originals for the Indian market, and that means almost like one big original, a Bollywood-like original films or a series coming out that brings in a lot of value on the table now at the new price point for the Indian audiences.
Okay, so if I could now come back to you, Haneet, you've just heard what he is saying, what Mihir has to say. But is it enough to let's say dislodge YouTube, which is clearly the winner in India at the moment?
Um, I think I think the target for Netflix is not exactly to dislodge YouTube. YouTube again, it's a very different platform. It's a I mean the way we categorize it, it's a user-generated content platform. Whereas Netflix is basically they invest in originals and they license different types of content from global production houses. So it's a totally different ball game when it comes to YouTube and Netflix particularly. But yes, I mean, going forward, as Netflix has announced, that they'll be investing more and more in originals, and the game for them is, not exactly because the market is still in a growth stage. So it is important for Netflix to add as many users as possible in the Indian market to target the next 100 million users for them.
And would you agree with that point, Mihir? We've been talking about how Netflix's client base, its target audience in India has clearly been far more niche, right, compared to the competitors. And I asked you about money. Netflix doesn't have the deep pockets, let's say, of Jeff Bezos and Amazon. Globally, we've been hearing about how, is it going to run out of cash? No, it's not running out of cash. Oh, it has another quarter to go by. While all of that might have been a little exaggerated, the fact is it doesn't have the deep pockets of, let's say, a Star and Amazon.
Well, I mean, for Netflix, India is the next big frontier. If they have to kind of go to the next level of new subscriber additions, they're already sitting on a high base of 150 million plus global subscribers. And to get growth from here, they will have to definitely tap the Indian market and allocate a larger part of the content budgets for the Indian market. And frankly, comparing this with a Hotstar or some of the local OTT platforms like Alt Balaji or ZEE5, Netflix investment on content will be spread across their subscribers globally, unlike just for the Indian market. So I definitely see them going all guns blazing for making investments for local content.
Would you agree with that point over here? And I want to ask you the same question, Hanish. Netflix doesn't have the pockets, let's say, that Fox has, Star has, YouTube has, Jeff Bezos of Amazon has. Can that work against it when it's looking to come up with offerings like 199 rupees a month?
I guess, I mean, if you look at the numbers and we're considering the recent quarterly financial release from Netflix, I think Netflix has been spending more money on creating new content as compared to any other platform. So when it comes to content, Netflix is still considered as a king of content. So I would say, adding 200 rupees subscription plan, especially tailored for India, it is going to do pretty well among Indian consumers who are already now used to paying, 200 bucks or, for a platform like Hotstar. So when it comes to content, I think, Netflix is going to be very successful in India, at least in 2019.
We have seen one big disruption in recent years, and that has been Jio. With Mukesh Ambani saying that data is the new oil, the internet penetration, the smartphone penetration, a lot of that has been riding on the Jio wave. So, Mihir, when we say that, and when you know that Jio also has ambitions in the media world, it's anyway got the data point. It's looking at creating content. It has interest in sports. It's going to happen at some point, right? It also owns news outlets. So, Mir, is that really going to be the big disruptor? Or do you think that, people like the companies like Netflix are actually bracing up for that?
Well, I think it's the entire ecosystem is now looking to work much more collaboratively. Even from Jio's point of view, it's yes, they will definitely look at backward integrating into content, but at the same time, they are looking at data as content as a use case for consumers to guzzle up more data. And whether the consumers are consuming Netflix or their own original content or other third-party OTT platforms, I think it's becoming much more collaborative, yet competitive ecosystem.
If I could also ask the same very question to Hanish. Hanish, what do you make of that? You know, we've heard Mukesh Ambani data is a new oil. At one of the AGMs, he, along with his children, talked about that Geo fiber cable for the television sets. He's got interest in media, whether it's the news outlets, movies. He owns in IPL. He owns Mumbai Indians. It's going to happen at one point, right? From the House of Geo, a big move in the media space in how we consume media. So do you think this move today by Netflix is in anticipation of that?
Yeah. So even if we look at the overall data consumption in India, the overall mobile data consumption, the video data, it accounts for like 70% of the total data consumption on mobile network. And even when it comes to OTTs Netflix, Amazon Prime, or Hotstar, or Balaji, anybody, I mean, we see that 90% of this video consumption is actually happening through smartphones, and this places India in a very unique position because the overall data, the content consumption in India is particularly very high when compared with other even developed markets. So India is well placed to become a smartphone mobile first country, as compared to any other country in the world. So, and at the same time, yes, I mean, Geo, it has been pouring more and more into the content delivery and everything. So we are not far behind when Geo will enter our homes, and there is a total digital transformation, which is the transition which is happening from traditional TV consumption, and it is now moving towards the digital consumption through internet. So in future, you never know, if you might not have long cables connected with your TVs. Everything will be streamed over the internet. So, and yes, when Geo has put money at the right time, when India is going through a total digital transformation.
Okay, if I could come to you now, Mihiran, the market share by operator, and this is, of course, data that you've shared with us. In the calendar year 2019, YouTube 40%, down from 45% a year before that. Hotstar 23%, down from 21% a year before that. Netflix flat at 11%, as I said at the start of the interview. Amazon Prime Video 8%, up from 6% before that. Others flat at 18%. Game on by Netflix?
Definitely. We'll definitely see an increase in market share for Netflix going forward. And as the market for SVOD in particular, the subscription VOD, starts to open up, Netflix will also have a significant share of the overall market, both advertisement and subscription. We expect the market by 2019 to be to the tune of about $1.2 billion, and that's where we are seeing Netflix has about 11% share. And the market in the next 5 years will be to the tune of about $3.5 billion. And Netflix share there will be quite substantial. We are still yet to evaluate our revised numbers, given the new plan has just got announced, but we expect definitely a higher market share than what it is currently.
Okay, so you think the game is definitely on. Let's see if it's indeed going to be a blockbuster move by Netflix, which can, completely disrupt the market. Hanish, not my words. This is what Netflix said after its last earnings, when it saw a degrowth in the United States for the first time ever, and we saw it resulted in the share price too, right? It's worried. It has lost shows like Friends and Office in its home market. It's clearly looking at now new markets like India. It said its average revenue per user in India is less than $5. Now you're having a plan of 199 rupees a month. It's sounding like a cash guzzler when you also look at the kind of content that Netflix is trying to create, the kind of superstars and blockbusters it's planning in India going forward, all that it has announced to. So do you think this is just, what you see initially, get more people on and then increase prices? Can a 199 rupee per month be sustainable?
Yes, I think we can't really compare the India market with US market. US market is very mature when it comes to content consumption, and it is not only about Netflix, because there are other players like Hulu, and more players like Disney Plus are also coming to the US market. So it is becoming more and more challenging for existing OTT players. But when we talk about India market, if we look at 2 3 years back in 2014, the consumers, they were still not very open to paying for the content, and majority of the, especially the Indian youth, they used to depend on downloads, free internet downloads, and torrent websites to watch Hollywood content, or I would say English content. So this has changed now. I mean, now in 2019, people are still open to pay for video streaming online. So it is more about the market growth and the market maturity. And this is the, I believe this is the right approach, because first you need to develop the market, before trying to monetize the opportunity. So yes, it's totally a perfect plan. They need to broaden their user base first and then start monetizing it.